Hey guys, welcome to this video. Today we're going to talk about indicators, and specifically we're going to talk about Bollinger Bands as a specific indicator. So what is an indicator? Well, we talk about chart patterns, we talk about trends, and we talk about how to predict the price movements. An indicator is basically a tool that measures certain things some of them that we have discussed, but importantly, they are measuring price and volume, right? And they try to use these two factors to predict where the price is going to go. There are multiple different indicators within technical analysis. For example, Bollinger Bands, there are also moving averages, etc., etc. And technical analysis is the study of charts, right? Where we look at the price and volume. So indicator is just to help us to better indicate when the price pattern is to our favor. So Bollinger Bands is one of the many indicators out there. However, it has been proven through time and through professional traders that it does hold a lot of value in technical analysis. And that's why we want to discuss it today. So let's get into Bollinger Bands. Let's take a look at this slide. So first of all, what is a Bollinger Band? Well, it's actually quite simple to read, right? Essentially, it has an upper band, which is, if you see this tunnel looking thing, the top of the lines, blue line in this case, is the upper band, and the lower band as well. And then imagine that these are actually the boundaries of the predicted price. We want to predict where the price will go, but in this case we want to predict where most likely they will stay within, right? So to note here is that indicators provide value only in certain circumstances or strategies. Usually they're used in conjunctions with other indicators or patterns, right? So in this case I'm talking about Bollinger Bands are usually used with other indicators or patterns. Usually Bollinger Bands are actually pretty good with something called a mean reverting strategy. We'll not go into strategies in this topic, but what a mean reverting strategy means that in simple terms it means that the price tends to fluctuate towards the mean, right, towards the middle. So in this case, Bollinger Bands help because it tells us where's the boundary. So once it hits the boundary, it'll likely go back to the middle. Maybe it'll bounce again and then go back to the middle again, as you can see over here. So it generally stays within this moving channel, right? So how is Bollinger Band calculated? This is also important for you to actually understand what a Bollinger Band is. First of all, you need to calculate the moving average. Usually it's in a period of 20. And what period means is that if you're looking on a daily basis, a period of 20 means 20 days, right? Second, you want to calculate the standard deviation. Typically Bollinger Bands use 2 if we have 20 periods. So, okay, how do you calculate moving average with a period of 20? That's actually quite straightforward. You just take the prices within the last 20 days in this case and average it out. And because the day keeps on moving, right, then in this case you'll get a new number for each new day. And that's why it's called a moving average, not just an average. Second, what is a standard deviation? So this might already seem too mathematical, so I'll actually briefly explain what standard deviation means. Some of you probably already know it, but for those who slept through the stat class, don't worry, I got you. Standard deviation measures the spread of the value, right? So what does this mean? It basically is calculated to account for the volatility or the spread of the price, right? So imagine this bell curve is the spread of all the different prices, right? Some of the prices may fall within the middle, some of them may be within 1 standard deviation, within 2 standard deviation, within 3 standard deviation. The higher the standard deviation, the less likely, I guess, the price will go there, but also in this case, it accounts for more and more majority of the price. So usually when we're talking about something that's within one standard deviation, it means the average plus one standard deviation and average minus one standard deviation. So this spread, this volatility accounts for basically 68% of all the data set. 2 standard deviation is around 95% and 3 standard deviation is around 99.7%, right? So why do we want to use 2? Why don't we use 3? Doesn't that account for more of the prices? Well, yes, but later you'll see that if you actually use higher standard deviation, let's say 3 or even higher, it's very unlikely that you'll find a price point that actually hit that. So you'll have less chances or less opportunities. So the indicator will be less useful, right? Because if it only indicates you once every, 2 years, maybe that's not a great indicator if you're trading frequently, right? So let's talk about an example. And we're going to be using TradingView. In this case, we're looking at Arrow Electronics. I'm choosing this stock is because it is fluctuating, so it could be a good stock to kind of use Bollinger Bands to predict certain price movements. So TradingView is a great tool. It has a lot of indicators, and what I mean by that is you don't have to calculate how Bollinger Bands will look like, right? TradingView will do it for you. You can just set the parameters, and it's pretty neat. So over here, BB stands for Bollinger Bands. You can click on the settings, and this is the default already, but you can of course change it. Length is the period that we talked about, and standard deviation over here. I won't go into too much details about all these different sources, but it determines how the moving average is going to calculate it from. So usually people just use close. So yeah, as you can see, the price majority of the time stays within this channel, right? And that's because we're calculating 2 standard deviation. So 95% of the time the price should be within the bands. So let's talk about how, if you look at the price for Arrow Electronics, and in this case, when it fluctuates, it tends to hit the lower band and revert to the mean, right? You see how it hits over here, goes back to the middle, hits the top, goes back to the middle, hits the top again, go back to the middle. While in this case, it keeps dropping, almost hit the middle, it drops again, and hit the middle, etc. Right? So it could be good to be paired with other indicators or other chart patterns that you might be looking at to determine when is a good entry point. Great. I'm also gonna briefly talk about how in TradingView there are so many different indicators, right? If you look at indicators, right, there are so many of them. There's Bollinger Bands that we talked about, there's moving averages, there is stochastic RSI, etc., etc. There are so many indicators out there, and not all of them are very useful. Some of them do very similar things, others are maybe completely out of whack. So I think it's important to understand what other traders or professional traders are using, so that you're also using the same indicators, right? In this case, it is good to be using the same things because you'll be able to see how the majority is behaving, and that psychology aspect is actually really important in trading as well. All right, so what are some of the key takeaways? Today, we talked about indicators, and specifically what is a Bollinger Band. We learned how it is calculated, and it is actually best suited for a strategy such as a mean reversion strategy. It should be paired with other indicators and shouldn't be your sole gauge on entering the trades, right? You can actually pair it with some of the stuff we talked about in our previous lectures in this technical analysis part. So I hope you enjoyed the content. I am definitely working hard to push the content to you guys. So if you do enjoy it, please like and subscribe to the channel. It will help my channel tremendously. Thank you so much.